Market saw some recovery in the last hour of trade while Nifty defended the levels above 22,900. Sensex closed near the 75,900 levels.
ABB shares trade in red despite strong fourth quarter numbers. Net profit soars 56%. The company reports highest revenue in the last 5 years. Also declares a dividend of 33 rupees and 50 paise per share.
Shares of Bharti Airtel slipped in trade. This after promoter entity offloads 0.8% stake in the company worth nearly 8,500 crore rupees. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we wrap up the day, of course, but also look ahead and prepare you for what's coming next. Well, I hope what comes next is a bit of a bounce. Today was a better day, relatively speaking. I'm Prashant. With me, my colleague Sudip. Sudip, hi.
Hi, Prashant. Absolutely. After those deep gashes and what looked like a bottomless pit, I mean, this is a much better looking screen right now. We don't have the green, but at least the fall kind of stemmed to a large extent today. At least even mid-caps relatively better off.
There are some buyers, right? It's not buyers are not absent completely. And I think that's a scary situation like we've had over the last many days when it's absolute no buyers and people just wanting to exit at any prices. Today, of course, was not that kind of a day. The Nifty recovered 100 points from the day's low on your screen. Nifty Bank will come up again, off the lows by almost 300 points. Mid-cap index recovered, but not so much. It was down more. And of course, the small cap index is another story, down about 1.8%. And that's the reason why, if you look at the NSE advanced decline, there was negative with declines outnumbering advances, some 2.5:1 or so by close, depending on what index, etc. you look at. But that's essentially the overall NSE advanced decline up on your screen. So, it's still painful out there, absolutely. But, I guess we are in that phase where the pace of declines, even though in specific stocks, is very sharp, and Vivek will come in and talk about that. But broadly, you are starting to find some interest, at least in large caps, at lower levels. Sudip.
Absolutely. And, today we were more or less in sync with our regional markets as well, barring Hang Seng. The Hong Kong market has a thing going of its own. Again, the Hong Kong market was rallying 1.5% today. But given the context, this was probably a pretty decent performance, buying from the opening lows and then more or less sustaining, at least in the mid caps and the large caps. The small cap index was down about 2%. If you look at the sectors where the buyers kind of emerged today, two pockets stood out. There was some buying in PSU stocks, which have been beaten down quite badly in the last couple of days. And there was some buying in the IT space as well. And the IT buying was not just the large cap buying. A lot of the tier 2 stocks, the mid cap IT stocks like Persistent, etc., they also found buyers. So it's telling us that now people are being brave enough to venture out in the market and start nibbling in, start sort of taking some bets, on the buy side as well. Just want to round up by talking about the downside. Today, very, very decided moves on the consumer side of the market on the way down, both staples and consumer discretionary stocks. Throw in autos as part of discretionary as well. So these were not in flavor today at all. They were on the downside. Finally, an eye on the VIX. Now, the VIX has spiked in the last couple of days, the volatility index. India VIX moved up to 16 yesterday. Today, with the market recovering a little bit, it's come down back below the 16 handle, which is good news. But let's see, the VIX needs to perhaps settle. We have to watch it for the next couple of sessions as well. Let's move on then and tell you what we've got lined up on the show today. As always, it's a packed next 20-odd minutes, starting with the movers and shakers. Vivek will get us the details over there. Stocks on the radar. Today, we will be looking at names like ABB India, Bharti Airtel, rategain, as well as Zen Technologies. All of these stocks were in focus today, and many of them coming under pressure because of either earnings or weak commentary. On Bharti Airtel, there was a large trade, so we'll tell you more about it as we go forward. But first, let's kick off the action with Vivek. Vivek, take us through the breakup of how the day was.
Well, thank you so much for that. Like you mentioned at the start, actually there was a certain amount of buying seen, especially at lower levels. So some nibbling was seen, and no other sector encapsulated this better than the buying that we saw as far as the IT space was concerned. The entire IT pack, especially the mid-cap IT, like you mentioned, the entire space saw some buying activity today. In fact, the mid-cap IT names like LTI, Persistent, Wipro, all of these stocks ended higher with significant gains, actually. The other set of stocks that saw a bit of recovery, especially in the second half of the trading session, was the metal pack. All of these names actually bounced off quite significantly from the lows, largely flattish, but there was a bounce you saw across the entire metal pack. The other set of stocks that saw a bit of a bounce from the intraday lows was actually the utility or the power sector stocks. A lot of these stocks have been beaten down quite significantly in the recent past, but today you did see some buying emerge with NTPC amongst the top gainers, over 3% higher. From the broader end of the markets, one particular stock stood out. Strong volumes, Gillette India, over 8% higher. This particular name, top gainer as far as the NSE 500 index was concerned. And Thermax, even while the entire capital goods space continued to witness selling pressure today, this particular stock, after the steep sell-off it's seen post-results, actually stood out today over 6% higher. But in the list of losers, none stands out higher, better than ABB India. It actually saw an intraday gain of 5% at one point of time, but this particular stock cooled off quite significantly, slightly muted commentary in terms of order inflow, in terms of margin moderation, and this particular stock saw quite a bit of a sell-off. The entire defense and the shipbuilding pack, this entire space continued to witness significant and intense selling pressure. Names like Bharat Dynamics, PTC Industries, HAL, all of them fell on high volumes. Rategain Travel Tech, this particular stock, we've been highlighting it for the past couple of trading sessions. Another very sharp downtick there. The company has gone ahead and downgraded the revenue guidance, and Street doesn't like it. And lastly, Natco Pharma, another stock that cooled off very significantly after the muted Q3, another 4% fall as far as Natco was concerned.
Okay, all right. A good comprehensive wrap out of what happened today in terms of stocks. Vivek, thank you very much for that. Jai Bala is with us to run us through what he's making of things. Sudip Bandyopadhyay is with us as well. Gentlemen, good to have both of you here. Jai, for people who are watching now and looking at markets after the correction, you were expecting maybe the possibility of a sort of, I don't want to say meaningful, but somewhat of a bounce from here?
That's right, Prashant. See, the markets have come to an important time pivot and significant support. As long as the market can hold about 22,650 to 22,700 for the next couple of sessions, I think there is a good potential for the market to see some counter-trend bounce, which could be a sizable one. I'm anticipating if the Nifty small cap index were to hold today's low, or maybe register another low tomorrow and hold that on, there's a potential to rally to somewhere close to 17,000 plus. And when it comes to the Nifty, if it were to hold today or tomorrow's low, which it's holding on to February 17th low, which is important. And if that were to sustain to tomorrow's sessions, there's a rally potential to even somewhere close to 24,000. But in the medium term, I anticipate this to be just a corrective bounce, and though a sizable one. As the market unravels over the next few weeks, assuming that this current low holds, I would think that will be a corrective bounce. But if the markets were to break below 22,650 today, tomorrow, or the day after tomorrow, there is a potential the Nifty, the large caps could drop to somewhere close to 22,200, which has been the June 4th low objective for me. But if the low of February 17th were to hold, there is a rally potential for the market.
So basically 15 to 17, about 13% on the small cap index. And so what's the trade to take? I mean, small caps, I'm assuming people own many of these names in their portfolio, but if you had to trade this bounce, wait for a day, 2 days, see if this holds, and then do what?
That's right.
What index or what stock?
That's right. See, the Nifty IT index has been the strongest in the entire correction. So you might want to do some fishing out there, but stay in the shallow end of the pool because this is an experimentative long, and this is a counter trend bounce. Although it would look attractive because of the size of the move, but you might want to keep your allocations to to a very low level, not plunge head on into the market as a bullish reversal for the market. So IT is one area, and in the broader markets, strong stocks like some of the pharma, some of the ITs, some in the defense, very, very selective in the defense sector. Be very careful, but it's all staying in the shallow end of the pool.
Okay, all right. Stay at the shallow end. Don't get too adventurous. That's the advice going out from Jai. We'll come back to Sudip as well for some more questions in just a bit. Let's look at some of the active stocks today that were in focus, and ABB India definitely tops that list. Now, there was a lot of buzz around the stock after coming out with the numbers quarterly update, but the stock declined despite what looked like a good set of numbers. So was there something in that analyst call that the street didn't like? Let's go back to Vivek and understand. Vivek?
Well, absolutely right. It's the analyst con call that the street didn't really like in terms of the kind of commentary the management gave in terms of order inflow, in terms of moderation as far as margins was concerned. First, when you're talking about the numbers themselves, a beat across the board, very strong, beat across consensus as well as the CNBC TV18 poll. The only blip as far as the numbers that were declared yesterday was concerned was the order inflow that actually saw degrowth, but on account of a higher base. But what is it that the management said as far as the conference call was concerned? Some moderation indicated both in order inflow as well as growth rates. Also, the management, remember the ABB actually works a lot on short cycle orders, and the management indicated that almost 65 to 70% of the order book would probably be exhausted in terms of execution in this particular calendar year itself, and just around 30-35% would be executed in the next year. So order visibility, a bit of a concern. Also, what the management did allude to and they accepted was that lower growth is something that they are penciling in, but they said that the lower growth is more transient in nature and not structural in nature. They've also indicated that there could be a moderation both in terms of EBITDA margins as well as growth before the next cycle of strong growth resumes. So this is something that has spooked the street, and on the back of that, you did see ABB cool off quite significantly in trade. Company also said that PAT margins will be in the range of 12 to 15%, taking into account the fluctuation as far as Forex is concerned as well.
All right, Vivek, thank you very much for that. By the way, ABB was one, but it's completely unrelated. But look at stocks like Gillette, stocks like GSK in trade today, some of the biggest volume-led gainers in the NSE, MNC names basically. Any thoughts, Sudip? Good afternoon. Sudip, can you hear me? Okay, I think we lost the line there. Do we have Sudip? Okay, I think we lost the line. Jay, any thoughts on any of these names?
See, I pointed out BSE Capital Goods being at a very important point sometime in December. It broke through a trend line, and it's a medium-term trend change. And I even pointed out Siemens clocking a triple top. And the BSE Capital Group index is trading at about 56,000 and change. And, it's coming to a support level of about 55,000. So it's not surprising that ABB and Siemens are underperforming. It's behaving as expected, but it's a bit a stretch into the downside. So expect some bounce to come around 4,900 mark.
Got that. Let's actually talk about the other one, right? The big block which happened today. I'm talking about Bharti, and promoter entity offloaded a significant amount of shares. Sudarshan is here with details and some contours of the deal. So over to you.
So first about the deal, block deals, 5.1 crore shares worth rupees 8,485 crore changed hands, and that happened in block deal window. So who was the seller? Promoter entity, that is Indian Continent Investments, which is a company of Mittal family, has sold 0.84% stake. Now who was the buyer? Bharti Telecom, which is a joint venture of Mittal family and Singtel, have bought 24% of that 0.84%. That comes to 1.24 crore shares. Now, what was the reasoning of Bharti Telecom buying in the block days? Company says Bharti Telecom's share buy has helped allocation to only key long-only names, and key long-only names are both global and domestic. And then what happens to shareholding post these block days? Bharti Telecom, which is JV between Mittal family and Singtel, now it holds around 40.47% stake. Singtel via its subsidiary Pastel holds 9.50% stake, and ICIL, that is India Continent Investments, now its holding comes down to 2.47%. Remember, few months ago, both Singtel and Sunil Bharti Mittal had announced that at the end of any strategic announcements or deals that happen over the next few months, both Singtel and Mittal family want to have a similar shareholding in Bharti Airtel. At the end, stock closed with minor cuts today.
Right, so thank you very much for that. That's Bharti for you, and the stock up on your screens. Just two other names, right? And these are all both casualties that we've had over the last 2 days this week. RateGain is one. They've slashed their guidance for the second time. Stock's down about 18% this week. And Zentek continues to fall like a stone. I mean, third session in a row now. Again, there were numbers here. We spoke with the management as well. So let's wrap these up with Upasana. Upasana, over to you.
First up, let me talk about rategain. The stock is down 18% in the last 2 days. Company has cut its revenue growth guidance to 12 to 13% versus 15% earlier. Mind you, this is the second revenue guidance cut for FY25, which was earlier guided at 20%. So 20% cut to 15%, and now it's cut to 12 to 13%. Now, company is expecting single-digit revenue growth in Q4. This is due to delay in signing of certain deals. And company has also highlighted that it has experienced decision-making delays in some of the international markets. Company has also shared its outlook on margin. It says that the Q3 margins of 22% cannot be considered as a base going forward. And in the short term, it expects some compromise in the margins, but in the long term, it is confident of achieving 25 to 30% margin as the company will scale its business to 2,000 crore plus revenues. Now, moving to Zentek, this stock has lost nearly 60% of its value since January this year. The stock is down 30% in the last 2 days after company announced its Q3 results. Now, company's growth lowered this quarter as compared to the past performances, and it is also a miss to street estimates. Now, promoter holding in the company also slipped below 50% in the Q3. This was due to equity dilution of 1,000 crore QIP, which was launched last year. Now, management joined us earlier this morning, and company says that it has no plans to buy shares from the open market. It sticks to its FY25 guidance of 900 crore revenue and 35% of the EBITDA margin. It has also guided that the top line will be growing at 50% CAGR in the next 3 years, and margins, which were the key concern for the street, which were down nearly about 1,400 basis points. This, the management has said, it is mainly because of the change in the product mix of the company. Also, companies emphasized that 800 crore orders will be finalized by Q1 FY26. Listen in.
Diluted, the dilution has been mostly done because of the QIP that we did. We did sell, we did sell 4% of our stake, on 2 occasions. But the dilution has mostly been because we raised the money for acquisitions and working capital needs. So, I don't think we will be entering the market to buy it, because the intention was not to trade, sell high and buy low. The intention was we wanted to have some money on the table. With respect to by 27, I think it should at least double. The revenue should at least double for ARI. That's our expectation. And margin, I think it should get to the margin of 35 EBITDA and 25 net. Even though now it's around 13-14%, we expect that to ramp up, especially when we go with our value addition.
Okay, that was Zen Technologies, also a stock that lost another 10% today. We've been talking about a lot of losers. As we take the break, let's talk about a winning sector in the market today, and that definitely was IT. There was buying coming in both large cap names as well as several mid caps. We caught up with Kotak Institutional Equities' Kamaljeet Saluja, who's the senior executive director over there, and he's also head of research, tracks the IT sector very, very carefully. He spoke about some of the bets that one can perhaps look at in a market like this, both in large cap as well as mid cap IT. Take a look. We'll take that break and come right back.
See, essentially, it's a recovery. It's a very gradual recovery. It's a frustrating recovery as well. So let's say if you're penciling, if these companies would have grown by around, on an average, 4 to 4.5% in FY 2025, then at best you can pencil in 6.5 to 7% growth in FY 2026. Accenture, I think the valuations have almost converged with Infy and TCS. Cognizant, you cannot compare on valuation because the growth rates are lower and the company is in a turnaround phase. Avoid engineering services because there are headwinds in engineering services across multiple segments, whether in autos, whether it's in high tech, etc. So I would avoid engineering services. When it comes to between the incumbents and challengers, there has to be some fun, right? And there has to be what I would say, some sugar as well, rush as well in names like Persist and Coforge. So you end up buying. I will recommend Coforge because the growth will be turbocharged, far better than what basically the street is building in.
Welcome back. You're with us on Market Forward. Let's take a look at some of the key management commentary pieces that we picked up during the course of the day. Borosil was under pressure on the back of the company's third quarter numbers. The management says the company's corporate gifting business faced some challenges. Hence, it has lowered its sales growth guidance. Further, the company expects EBITDA margin of 20 to 22% in the medium term. Also, the management expects EBITDA margins to be around 21% by FY27.
Borosil Renewables is next up. Shares of the company, shares of the stock gained in trade post its third quarter numbers. Management says that they expect the company to achieve 30% margins in the future. For Q4, they've guided EBITDA margin to be between 25 and 30%. Okay, well, let's quickly wrap out with what to watch out for as we come back tomorrow. Events to watch. Upasana is here with that list. Upasana.
First up, let me start with the global economic cues. Japan will be reporting its trade balance data for the month of Jan. UK will be reporting its CPI Y-on-Y numbers for the month of Jan. And back in Europe, ECB will be holding its non-monetary policy meeting tomorrow. Now, mind you that the FOMC meetings will also be out tomorrow. And this is past midnight for us. Now, Hexaware Technologies IPO will also be listed on the bourses tomorrow, and Apple announces a new launch event tomorrow, but there are speculations on iPhone SE launch, which is likely to be announced tomorrow. So all in all, these are the entire host of events that we'll be closely tracking for tomorrow.
All right. Thanks very much, Upasana, for that. Well, with that, it's a wrap on this edition of Markets Forward. Thank you very much for staying with us. But news and updates will follow and continue on the other side of a quick commercial break.